Ladies and gentlemen, my brothers and my sisters, I am speaking slowly. This is the acid breath, and I want to call this the no bullshit edition. It is the 13th of October, 2025. US equities open, US treasuries closed for the Columbus holiday. Today was a reset day, and there's some resetting and some confession that I have to start with. I am attempting to speak calmly because it is well past 10 o'clock and I have been confronted with operational issues, log jams, errors. Time has slipped away. And I have this wearable device monitoring, if you will, health statistics. And it keeps yapping at me the importance of sleep. And I typically, during this down period with the island being so empty, I'm definitely recording about 8 hours of sleep. Mostly low stress sleep. That is good. And I try and be in bed at 10, so I should be in bed now. But I'm not. I'm just starting to record. And so I could be rather hyper and feral when I'm trying to resist the urge. I mentioned the travesty of a confession. We live in a strange time. I call upon the technology. My executive assistant, I have several executive assistants, and they're digital assistants. Super Grok, ChatGPT, Gemini. And the Super Grok let me down. I think I gave you an example of this. From the summer, I was in Paris and I put the details of a rendezvous with a doctor in a hospital. And I was just looking to finesse in terms of travel times, etc. And unknown to me, the devious AI decided to play fast and loose and invented a new doctor's name and another hospital, and I was sent to the wrong address. Well, the same fate befell me on Friday. Super Grok invented, in a parallel universe, Super Grok had the US Labor Statistics Office, or the Bureau for Labor Statistics. And maybe that's the clue. Why would they be producing the CPI? Anyway, Super Grok convinced me that America reported its CPI for September at the end of last week. And of course, this followed on from the hype. I can't say hysteria, I want to, but the day before the Thursday, we had the private sector trying to fill the void of the absence of government data by saying, hey, over here, we've got a statistic. And there was, I can't recall its name, Open something or other, with a very narrow construct. Didn't even cover all goods, but it certainly didn't cover services. And they concluded that month-over-month prices were rising 0.6, which really would be that poor push panic, shouting fire in the cinema and creating a stampede. I was maintaining that it was inflaming the present accepted belief system. What is the present accepted belief system? It is that central banks cannot be trusted, and such are the mounting problems that our society is confronted with. And I do want to say, if I take a step back, I think it was back in 2010 when I had short hair, when I wore a suit, when I used to appear on the BBC, and I went up against the former Prime Minister of Denmark, and he had a good old rant about the evils of speculators like I. And my retort was that the venom in his diatribe against me and the financial community was partly a function of just how great the magnitude of problems were back then with regard to debt levels, and back then the near insolvency of the global financial sector. Now that near insolvency was it solved, or a can that was kicked down the road? I want to say it was solved by a transfer of liabilities from the private sector to the public, which is to say that the public debt load, debt to GDP, it hasn't almost doubled, but it's gone from high 60s or so to 100, 110% of GDP. About $35 trillion of what we call bonds, notes, and US Treasury bills against a GDP of maybe $28 trillion. I said back then, the problems were perhaps greater than the ability of politicians to respond or actually to come up with compelling solutions. And clearly, if that observation holds, is perhaps more acutely appropriate today. And today, there are many prominent and surging prices. NVIDIA, the Mag 7, the NASDAQ. And gold. And now silver, or come to silver. And the movement in gold is now, is it a bubble? I mean, what is a price bubble? And why does my music keep coming in and out? But anyway, what is a price bubble? The movement in gold, the price change, the rate of change in gold has been accelerating. To the upside. And Twitter and similar platforms for people to expound upon their views is adamant that politicians, and perhaps the disasters which have yet to come, perhaps the notion of a US recession, maybe more fanciful, but the technology risk that AI does not deliver. Less fanciful, that the build out of trillions upon trillions of dollars, and we could be talking $35 trillion of expenditure over the next 20 years, 1 times US global GDP. That it's that people draw parallels with the build out of other transportation nodes, which were profound catalysts for future economic growth. And way back, dams, forgive me, canals, railroads, and the exuberance which led to that capital not being rationed and double, triple rail lines to the same destination. And of course, way closer to our generation, the build of fiber, dark fiber was put into the ground in the anticipation that the demand would come. And that guess was validated many years later with especially our ability to capture video, and not just any old video. Did video kill the radio star? When the iPhone was given that cinematic lens, that 4K resolution, we put a TV camera on everyone's telephone. And we killed the TV companies. We killed TV and cable. I can't recall the last time I switched a television on. I wonder if you can. But in between the growth of video and its very consumptive, I was going to say data, but bandwidth or the transmission certainly swallowed up all of that dark fiber, more than swallowed it up. Dark fiber, data centers. But again, the notion would be there are no dark data centers. We have almost a shortage of data centers, and we're sprinting to catch up. Perhaps more appropriate. And I'm very much quoting and examining some of the points raised by something which is new to me. This is rather embarrassing. You'd be saying, really, Oogie, you haven't watched this? I mean, welcome to, catch up with the rest of us. But, I've been, I'm busy. And say, boss, busy with what? Great question. But the All In podcast, where if you go to the menu and you just click on the parts where they actually discuss business and economics, it's damn good. So it's not dark data centers, but really it's the return on investment for these hyperscalers and indeed for the customers. Does the marginal return on utility, revenue, exceed the marginal cost? And we just do not know. Anyway, trying to pull out of that and back into Newsnight. This is me trying to recollect what on earth I was talking about. Newsnight and the problems being so greater than the ability of politicians to respond. And back then, gold was 2010. Yeah, it was 1,000 and heading rapidly to 2,000 within a year of those TV appearances. And then at 2000, it sat stranded, elevated by the advent of quantitative easing. So again, problems being too great for the politicians to bear, and central banks taking up the call to do something, and that this would be inflationary. And it took gold to $2,000. The American dollar was going to be, to quote Niall Ferguson, the Zimbabwe dollar is going to be trashed. The belief system that this worthless, the intrinsic value of currency is zero. It's a belief system. We believe it, and therefore we transact with it. The inflation, the inevitable inflation of quantitative easing did not materialize. And gold, it sat stranded around that fateful 2000 level until COVID, the pandemic response. But even then, not enough to propel it. But of course, in the last 15 months, we've seen it take out 3,000. And we've seen it recently take out 4,000. The acceleration. And so back to my mea culpa, I was very much aided and abetted by a parallel universe where super shit grok, pardon, coming alive, completely invented this narrative where the US government reported that the inflation, the CPI for September was up 0.1, so not the 0.6 quoted the day before by the private sector wannabe. I was like, aha, this is prima facie evidence of the belief system. People want to believe that the inflation, which peaked at nine something or other, 9% year over year, but is now down around 3. So it's still we still have inflation. Prices are still expanding, but the annual rate of change, of course, has can I say collapsed? I think I will from over 9% to just over 3, which in itself doesn't feel like it would explain why gold just has accelerated from $3,000 to $4,000 per ounce. Without 5 or 10 years of contemplation. So I must apologize. I feel silly compounding it. I had something on Instagram this morning where I'm like saying torch plush panique. Who cares Instagram? But I care. My word is my bond, is my what do I have? I only have my engagement, my understandings. Heavens, I struggle to understand one universe. The advent of these parallel universes is quite something else. Universe is created by what happened? Why do these platforms get that wrong? It's data. Why is it not checked? It's a known. Anyway, there you go. That's why it's the no bullshit edition, which is going to end up being very long because I'm speaking very slowly. Briefly again, I still struggle for the inflation. The government created inflation, the destruction of the fiat currency system. And I struggle because I think you would agree if there were inflation risks being taken, if Trump's tariffs were going to set us on the course of a 1970s style acceleration in the rate of expansion in general prices across the economy. I mean, I know British gilts have been a bit shaky. I know the 30-year JGB has been a bit shaky. But the US Treasury in the 10 years below 4%. And I don't know if have you seen Chinese 10-year rates? Wow. Really, really low. And the reason is that just the sheer size. Again, the public debt markets are greater than GDP. And the notion of a tail wagging the dog. That a bond market that fears inflationary tendencies by the central bank would immediately seek to price that in via the demand for a higher expected return, i.e. the price would fall until the yield was far greater than the 4% and far greater until it compensated the marginal buyer. And there is always a marginal buyer. These bonds have to be sold. And they will, as demonstrated through the pandemic, 10 years were initially sold in 2020 with yields below 50 basis points. And the inverse of that would be a very, very high price, a price greater than par. And then the bond market did take fright about the sheer scale of the pandemic intervention. And that 10-year was no longer less than 50 basis points, but it was 10 times greater. We hit the Niederhofer rule, the 5% ceiling. 10 years were yielding 5%. Very great demonstration of a fire break within our social democracies, making it very hard for the inflation, perhaps, the inflation ambitions of a malevolent government sector being contained by the private sector via the sheer magnitude of the Treasury bond market and daily repricing. But of course, we're not at 5% today. We're at 4%, which I think is a reflection of my cynicism, if you will, that of this accepted belief system that fiat currencies are inevitably going to create some form of hyperinflation, and that our only solitude, our only savings will be to be in these alternative assets. And I've got nothing wrong with alternative assets. My favorite being the Bitcoin, which is trending. But I just like things which are trending. It's got really very little to do about inflation. The trend and the size and the amount of prejudice. I mean, my principal attraction for Bitcoin is that people ignore the trend. They're blind to the trend and all they can see is prejudice. It doesn't work. I don't like it because ABC. In my world, I'm not allowed to have prejudice. I have to examine trend. Anyway, the two big things happened today. One very obvious, a really big thing, and I want to put a smile on my face because I love when these things happen. Silver and gold, baby. I feel like Bono and U2. When love comes to town, or is that another song? It's all tied up in Rattle and Hum. What am I talking about? Does anyone ever listen to U2? Again, evermore. Silver surpassed the all-time high of 1980. I think, I don't know. Remember, this is what do I call it? The no bullshit edition. I don't know, but I think silver is heavens. How do you measure the total market value of these commodity markets? Kind of tricky. All the order of our mind. Again, I was having a fight with the AIs. Like, just confirm because the run up in gold. I'd been saying gold had been $20 trillion. And I was thinking it must be 25, if not $30 trillion today. So getting close in on the market value of treasury notes, bills, and bonds. And Grok was saying, no, it's more like 15 because the higher estimates are taking the estimate of all the reserves in mines and the jewelry and stockpiles and industrial demand. Anyway, silver, $3 to $5 trillion. And Bitcoin, I think $2 trillion. I like small particles or atoms which are less heavy than others and are trending. I think they can trend more. Call me stupid. Anyway, silver, 45 years, I think, is the longest price recovery that certainly I'm aware of. And, I get so excited when we have this. Is it a compression? We have a channel. So silver, it's been a 45-year, I was going to say sideways channel, but, it went from $50. It lost 80, 90% of its value. Trickled along the bottom of irrelevance for a generation, almost 2 generations. 45 years, people. And now it's taken out the high. There was a notion that because the high, was it an artificial high? It'd been created by 2 Texan brothers, the Hunt brothers, who cornered the market. So was it a real market force when it traded at $50 in 1980? The price is the price. So yes, it was a real market force. And we're above $50. So when gold did this, it was the end of 2007. The same previous year for peaking, 1980. Perhaps the peak year, thereabouts, of a decade of chaos, which was about to mean revert back into decades of control, reliability, the while we're operating logically. Gold peaked at $850, and it was the end of 2007 when it finally exceeded that. And now it's 4,000, so it's like up 4 times. Question: is silver set to trade at $200? Crazier things that have happened. And again, small mass. And probably we should be looking at all the PGMs. Platinum, palladium, etc. The other ones, the more you look at the precious components, they come with industrial. But the industrial seems to be tied into this, the second big point today. And again, it comes from that All In podcast. Over the weekend, there seems to have been a reappraisal of the AI trade. And a large component of that would be OpenAI's deal with AMD. And in essence, is it a diversification away from NVIDIA? Or is it recognizing, and I think this is what was going on in the marketplace today, the inevitability of bottlenecks? The demand is just insane. And there are infrastructure limits. And it's not limited to NVIDIA and its super duper semiconductor chip and the software and the support. It's everything. And maybe the OpenAI deal was, did they secured? So they had to take a bet on an AMD chip, which might not be great. Their record is not great. On the other hand, if it works and they can plug it in and they're not constrained being a hyperscaler, then maybe that's okay. And the deal, you could say that the commitment they gave to purchase AMD chips gets paid for by the warrants, which allow them to take effective control of 10% of the company for almost nothing. Markets thought about that today. Let me tell you what they did not think about. They did not think about the credit cycle, the bankruptcy of First Brands, the Ohio Auto Parts Component Company. And they did not think of Jeffries, that seems to have had a very insidious, tempestuous, insidious relationship, raising money, introducing First Brands to the credit market, selling its debt, investing in its debt with its client money. And somewhere along the lines, being remiss in not seeing what seems to have been fraudulent activity. And there are billions of dollars missing. And this is, again, I remind you, it's not a sexy, high-flying, super-duper technology company. It's an auto parts company based in Ohio, whose most famous product is an oil filter, or oil for an oil filter. And the slogan was, you either pay up now or you can pay later. And heavens, certainly the pain is now, and the company's unlikely to pay ever that debt back. And of course, the other thing, I mean, there was no economic data, and Supergrok and the other AI platforms, they had their laugh on me. And so they didn't invent anything today. I hope they didn't invent. Please, people. I mean, why didn't anyone reach out to me and say, Hugh, what's CPI? And me, why didn't I notice that there was no CPI report in the next day's newspapers? Anyway. But the other thing, of course, was, the China 100% tariff and the return to trade wars, trade tensions. But over the weekend, someone, I don't know, Trump's busy saving the world. He was getting ready to board the plane, or he's on the plane to Israel, to Egypt, to whatever. And you got to dial it back a little bit. Dial it back a little bit on the Chinaman stuff. And my God, he did. He's like, oh, we love China. We only want good things for China. Fire, 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 pants on fire. What did he say? Everything with China will be fine. He's seeking cooperation, not people. I'm seeking cooperation, not confrontation. And of course, the legend, the Treasury Secretary, Scott. Scott should smoke cigars. Scott is on the plane to Israel, we're not saying 100% tariff. Not saying anything. 100% tariff. Nothing is locked in. Nothing is certain. So all that language just brought us back again. Brought us back from the edge. Just a bull market. It's tempestuous. You're meant to be scared. Expect farther. You should get 3, 4, 5% declines as well as up days. And then I saw, did this happen? If it didn't happen, please call me. But I believe, what do I believe? I believe Deutsche Bank were out there. And I've told you about this. I'm going to use my mouse, my Mac mouse. It's ergodynamic. I'm going to pretend that my mouse is my Apple iPhone. And so this is an example of just the nonsense that happens daily. And bring, that's a telephone. It doesn't sound like a telephone. Your phone goes, yeah, hi. And it's, hey, it's the guy from Deutsche Bank. It's your best friend. And it's some ungodly early hour in the morning, 6 in the morning. I do not get out of bed before 9. Partly because of these damn podcasts. Hey, Hugh. Yeah, hi. How'd you get my number? I want to give you Edge. What, the guy who plays? I know. Don't stop talking about you two. Edge? What? Who are you? I'm your Deutsche Bank broker. Yeah, and well, I wanted you to be the first person to know. To know what? We are recommending an overweight on European equities. Really? Why? Because it's really cheap. Cheap, cheap, cheap. I hate that argument. And we reckon it's got greater earnings per share growth. We're thinking 10 to 12% the next 2 years. Superior to anywhere else. Really? Like superior to the US? Uh-huh. And is less leveraged. Cleaner balance sheets. Oh, go away! Never call me again. I don't know. It would take a lot for me to want to underweight the US and overweight Europe. And anyway, it's got nothing to do with geography and everything to do with companies. Again, I think each of the Mag 7 are greater in market capitalization than the German DAX. But that, the AI and there was this enormous ripple wave covering. Now it's spanning the full hardware chain. The charts are just frankly, like am I a chart guy? Charts are like sheet music, and they allow me to hear future riffs and chords. I can hear the end of the song by hearing the beginning. That's what I want to say. And there ain't a bad chart. And I would be looking to own a lot of. I'd want to, if I was running professional one today, I would want, of course, I would have, but I'd be feeling very good about having a representation across the food chain. And just these ugly old chip companies that have been around forever, they're taking, like silver, they're taking out 20 and 25-year price highs. I'd be long silver. I'm long topics. Topics took, what did we say, took 25 years. The Dow Jones took 25 years to make a new high after 1929. Silver took 45 years. Think, power. Where's that power coming from? Supposedly it's coming from, again, the inevitable decline in fiat. So I don't know where it's coming from, but it wouldn't stop me owning it. People want to know all the answers. You're investing in the greatest risk variables is something which is going to happen tomorrow. So I don't need to know the answer. And indeed, answers, academics and indeed everyone else, the wider community, they can't tell you why stocks peaked and then plummeted as they did in 1929. We were talking about market wizards, October 1987. Why did that happen? Why did the Dow fall 20% in a day? The music's thinking about it. We don't know. Or they don't know if we don't know. So why are you looking for the answers? I'm just looking for the signal. And the signal's coming through really. There's been static, silver static for 45 years. There's been static in Japan for 25 years. I hear a signal. And then, oh, but maybe, oh my God, how am I going to say this? There was an awful story. Xiaomi, probably not how you pronounce it. Xiaomi, the Chinese tech company, which does driverless cars and many other things. Down 12% today. There was another fatality in a driverless car which crashed. Cars crash. Imagine being a passenger. The doors are locked. You can't get out. I've been in these cars. It's not impossible that they crash. We have other drivers. What you can be the best motorcycle cyclist, the most proficient, the world champion of going around tracks very, very quick. But you just need one drunk person, one reckless person, and still a huge, huge, huge issue for Elon and Tesla. Tesla share price up 5%. And I don't want to talk about Tesla. I always say that, but Tesla has to make new highs and has to make new highs soon. Right, what else? US banks are going to be reporting starting tomorrow. I'm going to have something better to say than I keep putting myself down. We're going to have something else to talk about tomorrow. And so I'm going to conclude. I did get some questions from people. I'm going to kind of read them out. I got a message from Mark, and he said, will the end game for the UK be dollarization? What are you talking about? Like UK is Argentina? I mean, UK would like, Argentina where it's going. Mile. Argentina's dollarization because over 100 years of ineptitude. The ineptitude in the UK is not quite 100 years. Dollarization for the UK. Gilts could get wobbly. Gilts are wobbly. Sterling is a patsy. Sterling. So can I say something interesting? Don't know. The level of sterling vis-a-vis the dollar. The cable is kind of at levels similar to when silver was last at $50. Early 1980s. In the early 1980s, the rise to leadership of Thatcher was the UK was bankrupt. So the currency, the British currency is it's already kind of close to the levels of, the UK feels intellectually bankrupt today. Very hard to imagine hope. The most successful people, most remunerated entrepreneurs are leaving. They're being almost chased out by. They're being chased out because the public is not ready to accept that it can't have everything. And so rather than cutting back, they have to try and raise revenue. They're trying to raise revenue from the people that don't have to live there. But sterling is priced at the level of intellectual bankruptcy. And yet I think sterling will trade weaker again. I think we will go back to that whole notion of breaking the buck. So that's what I want to say about that. And then there was a question from Boonboja. I hope I'm pronouncing that properly. Boonboja. Good evening, Boonboja. I'm making you sound Indian, and maybe you are, or maybe you're Eastern European, or maybe you're from Scotland. How do you recognize the intuition that tells you when to move? It's a great question. I mean, so for George Soros, his story was his backache. For me, it's voices in my head. And it might be price signal, it might be reading something, it might be something someone said. But the voices start going, they oscillate and they get louder and it's uncomfortable. And I learned that the only way to deal with this cacophony of sound in my head was I had to release some steam. And so whenever I kind of had the Soros back pain, which really was an elevation of traffic, mental traffic, I had a rule of 1/3. I would either take a third off or buy an extra third. But be a third was my increment. My old boss, when I first started with the hedge fund, he would vacation in the Caribbean. And that's why I'm here, because my boss used to do it at Christmas time. And I was like, oh, weather was so bad in the UK. It still is. But so he was in Antigua and someone had to manage the risk book. He would be during the winter, 6 hours time difference. And some unlucky person had to take the call from the boss who would be waking up and he'd want a rundown of what was happening and the daily P&L. What's the score? What's the score? And I saw really, really smart, tough people reduced to tears with the call from Antigua. And I was like, I'm going to do it. Give it to me. Give it to me. I'll take control of the hedge fund. And that's where my rule came from. He was on vacation. Prices were moving. And you had to be robust. And I was like, it doesn't look good. I take a third off or I buy a third. Take action. I think it's this. I think the French Foreign Legion have this. If in doubt, move forward. Run into the bullets. Boom. It's not like you're French. We brought you in from another country. You're crazy. Move forward. Take action. Never sit there. Never cower. And so the call would come, and it's like, yeah, what? I was like, yeah, I took a third off. And rather than the rage, it's like, okay, buy it back. Fine, no problem. Oh, I bought more. You did more. Fine, take it off. You did something. Keeps you alive. The worst thing is rigid. Procrastinate. You procrastinate, and you are, boom, you're dead. And then I got a message from, forgive me, I think it's Barbaric. Barbaric. This podcast is barbaric. What is mainstream? What is the mainstream missing? Why do we keep underestimating the US economy? I'm going to finish at this point, on this one. I gave you my mea culpa on the TLT. And actually, there was a message. Who was the message from? There was a message from Rob Long. Rob, he said, Hugh, I'm married, so I know long-term pain. Rob, I know long-term pain. I've held the TLT, the long duration US Treasuries, forever. It's now finally paying off. Rob, what are you talking about? It's not paying off. Pays off when the 1 year moving average is trending positively and the spot price is above it. It's paying off. It's presently going sideways. My TLT, I gave myself 2 years and I had to close out because the US economy has switched and pivoted to being the locomotive of global economic growth. And the TLT is not going to move this side of a recession. and a recession, which is unemployment. And even then, and back to why gold is surging and silver is breaking a 45-year price high. If we have a recession, therefore making the good folk unemployed, well, the government always comes in and gives you money. Hey, we're the government. Yeah, we're sorry there's a recession. Let me bail out the banks. Where's that money going to come from? QE, again, this is why the gold and the silver are moving. But the persistency of the economic growth is just a function of just how enormous the fiscal expansion from the pandemic was, and how it was and is baked in for many, many years, at least until 2027. Growth is baked in. And then on top of that, of course, AI comes in. These hyperscalers, the sums being spent are enormous. Enormous. And then, of course, the new Trump administration is pursuing radical economic policies, which I love me, hate me, I support them. And it's almost like, I can't do this, but what the heck? It's my podcast. I'll cry if I want to. We had McCarthyism. Then we had wokeism. And there were things you just couldn't say, and there were positions that you just couldn't speak against, economic positions. And that's all been thrown away. And it feels very liberating to the business community. And animal spirits, confidence and sentiment is really, really high. The dollar's down 10%. No, almost down 10% on the year. It's another function which kind of makes it a little bit easier. So for all of those reasons, but the incredible magnitude of the spending, the public spending, which again, okay, there you go. That is grist to the mill for the gold bugs, for the inevitability of the fiat implosion. But the sheer scale, the persistency, the fact that it's baked in over multiple cycles, multiple years, better said, the sheer enormous scale at the same time as the AI build out, the fact that you had the private sector refinance in 2020, 2021. 30-year mortgage rates below 3%. These are all the reasons why the mainstream, including myself, missed it. Missed the persistency of US economic growth. And growth, US growth is the locomotive for global growth. I think that's here to stay. And again, that's the sovereign quest, campaign, one nation against another. The two tribes go to war. And so again, on the persistency of economic growth, the sheer revolt of the pandemic that encouraged simply like a global war type spending program. The AI data center build, which is like building canals and railroads for the first time on the American continent. The the capacity constraints. I mean, energy, the amount of energy assets that will have to be built. And then back to the pandemic again, the fact that it revealed the vulnerability of the US, that it became apparent that they'd outsourced everything. And so now everything has to be brought back on shore. US economic growth is going to remain. Yeah, we will have recessions. But the US, I think, is now supplanting China as the locomotive of global economic growth. I believe I've spoken for just under an hour. I seek your forgiveness for being an ass on that and telling you about a fictional CPI last Friday. I'm confusing people on the gold. Gold is trending. I buy things trending higher. Gold is now like 25% above its 1 year moving average. And I just don't think there's end. Gold is a bubble, and I can play bubbles. I've just got alternatives. And I think I'd prefer silver to gold here. Is silver in 2007? Like I say, can silver trade to 200? Can gold trade to 8? Can gold trade 8 to 16? Even if gold today, we're saying, even if you limit it to just all the gold ever mined and say it's 15 trillion, is it going to be 60 trillion? Is it going to be half of global GDP? Remember, it peaked 1980 at $850. And it was 20% of GDP. Anything is possible, I guess, but don't fancy the odds on that. But can silver be a $6 or a $9 trillion asset? Why not? Bitcoin, can it be a $20 trillion asset? Why not? And then lastly, and I thought that it came from watching the All In podcast. Oh my God, talking about other podcasts. But the bull or bubble, the BB in gold, macro guys are not really macro hedge funds are not employed to buy Nvidia, albeit AI is of such a scale that it's a macro force, but they're not engaged. Their client engagement form does not say go and buy the largest company on earth. They can't buy the TLT, sorry, Rob. They probably don't want to sell it. The vol and the price of options for short-term interest rates has been really high until very recently. And that's something maybe I'll discuss tomorrow night. That playing a tale of interest rates falling very low. I don't know where'd that come from, but the return on that tail structure has been really, really unexciting. So there's been and currency, yeah, hedge funds don't really like trading currencies. Very, very difficult. Like trudging through sludge, onomatopoeia. So what are you gonna do? And you get a trending asset, gold. Give me gold, give me gold, give me gold. So, that's going on. And of course, new buyers, central bankers. Now, if I hear one time rejoicing that central banks are buying the Chinese safe being their central bank, they're buying gold because we with the SWIFT system and whatever we seized, and I think rightly we said to the Russians, we got rules. We don't invade other sovereign nations, so you're going to pay a penalty. I applaud that, but the incentivization for roguish, less democratic nations to hoard gold. Is it? Okay, here's a question. Is it a bullish thing that a central bank is buying gold? Okay. Well, we would have to examine the behavior of central banks purchasing assets. We'd have to examine when they did it, why they were doing it, and what were the results. Well, it's not very illuminating. Now, maybe this is a jaundiced selection, but I'm here in St. Bart's because Gordon Brown, the Chancellor of the British Exchequer back in the day, in 2002, 2003, decided after accumulating gold for 200-300 years through war and famine and the empire and the decline of the empire, 2003, they sold, how much did they sell? They sold at least a quarter of their total reserves. Below $300, they sold it. The central bank sold gold. And it wasn't just the Bank of England. All central banks were selling gold. I bought it. Fast forward. QE. One of my favorite lines from the Fed minutes, I don't know if it was 2010 or so, I can't recall the governor, was it the Dallas governor? He's like, QE, why are we buying treasuries? Because the founding principle of being a central bank is this Bagehot principle. Bagehot, I think, was his Bank of England governor. And the whole notion is the central bank, it's a public bank that stands aloof and separate and supremely well capitalized by the sovereign to step in a panic and settle everyone's nerves by buying the asset that everyone is selling, pushing liquidity back to the private sector. Again, why is the central bank buying treasuries in 2009? In the face of the insolvency of the financial sector, when every pension fund and speculator wants to own treasuries. Why are we buying what they want us to buy? So I kind of don't care what central banks. I don't really see it as a reason. No, a reason I should mimic their behavior. Now, if you're telling me that Stan Druckenmiller, he's putting 100% of his fund in gold. I'm listening, and I did hear that. Oh God, what's he called? The double line guy is late. I've got to stop. I can't recall his name now. Jeff Gundlach. Jeff's a bit kooky. Pop, kettle, black. And Jeff's like, 25% in gold. Maybe that's not enough. So I hear that. I think gold is the bigger of the purported bubbles that exist today. But we're not here to call names. We're here to look for, I would say to you, we're busy with our lives, with our families, with our social life, and with our jobs. And we're never going to spend or be able to dedicate the time of professional investors to research. And I don't know how much actually value added comes from it. We want to be slothful, and we need a kind of cheat sheet. And my cheat sheet is you want to invest, you want to have a portfolio of, say, 100 stocks. So you might have, or stocks or indices, commodities. And it doesn't have to be 100, but a lot, 20, 25, 30. Especially if it's stocks, because we want to eliminate as much as possible idiosyncratic risk. And we want to buy things which have just broken out of long compressions, with a bet that there's an energy that will propel them the way gold went from 850 to 4,050, the way NASDAQ went up fivefold, and many others. And so today that would be topics. It would be silver. I mean, yeah, okay. Gold is so far. I mean, gold now is to my mind, it's done it. I'm looking for things which are just close to that breakout. Qualcomm. Where'd that come from? Qualcomm. Again, cheat. Valuation. There's a big risk on Qualcomm. It makes the chips that kind of do the Wi-Fi, the pictures, they're in your phone, they're in your computer. I don't know what I'm talking about, but they're kind of integral. But half their sales are in China. People don't like that. But Qualcomm is just above the NASDAQ high of March 2000. Just above it. And what did Trump say? You know, we wish the best to our Chinese friends. Would I want Qualcomm to be all of my portfolio? No, but could I have a 1% holding in my portfolio in Qualcomm? Here? Yeah, why not? So I can't believe it, but I'm done. And I've ended on Qualcomm. I know nothing about Qualcomm, but you don't need to. Again, finally, why did the S&P drop 20% in October 1987? You know what? No, you don't have to know. You just have to be invested. You got to be disciplined. You got to have some cute ideas. And that's why we're asset capitalists. And that's why, oh my God, I'm going to bed. Peace, love. What do I say? I say bisous. French. And I say French because bisous means kisses in French. I don't mean like I'm sticking my tongue down your throat. Oh my God, heaven forbid. I'm off. Good night. Thank you very much.